I don't know if this is going to be a half-hour class, a 45-minute class, a 2-hour class, but we should have plenty of time to get through any questions. And I do want it to be participatory. So if you do have a question and I do talk fast and you want to know something, go ahead and type it into the question and answer tab. Don't use the chat tab. Use the question and answer tab because that's the only one I'm looking at, and I'll do my best to answer it as I'm kind of going through this. But let's start it off.
Thanks, Mike.
I need to cover the same disclaimers that Kendall had up there, that trading securities, options, futures can involve high risk, loss of any funds invested. So pretty much everything we're covering tonight is really just for educational purposes. I'm not your broker. I'm not your accountant. I'm just here to talk to you about what's happening in the markets, talking specifically about tariffs and why they're there, and how we can use them to our benefit and to protect our portfolio. Okay. And I think the good thing about that, Kendall, is that you mentioned that these are good for about 30 days or so, which is perfect timing because I don't think we're going to be talking about tariffs in November or December. So if you're watching this on YouTube in November, December, it's probably a little bit outdated. So this is a pretty timely about what's happening right now.
It's true.
And this class, just to make sure you guys don't know, is about tariffs. So let's make it really easy to start off with, and then I'll jump in. I'll get faster and faster and faster as we go. So basically, just what is a tariff? You know, we hear it all the time: is what's a tariff? It's a raising tariff. President Trump is doing this and doing that, and it's scaring the markets right now. A lot of people are nervous, and I'll tell you why I think he's doing what he's doing, and then how we can actually use what's happening to our benefit. So what is a tariff? Simply, it's just a targeted tax on imported goods paid by the domestic business that's importing it. So for instance, let's say that Kendall and Don over at Protect Wealth, they want to bring in a bunch of pens and papers and little organizers that they're going to hand out at their events that they do, and they want to bring them over from a different country. Well, when that item comes from a different country, Kendall and Don, their company Protect Wealth, would pay an extra tax on top of that because it's coming from a country that we have a tariff on. So the country that's producing it and shipping it over does not pay the tariff. The company that's buying it and bringing it over here pays a tariff. So for instance, Amazon would be a big one for that. If Amazon says, hey, we need to put some stuff in our warehouse that we sell ourselves, but we're going to buy that item from China, and that item comes from China, Amazon pays the tariff on top of that, which means they're going to probably pass it on to you as it kind of goes forward. So it's a targeted tax on imported goods paid by the domestic business that's importing it. It's not paid by the country it's coming from. It's paid by whatever company is ordering that from the different country. These are often called economic protectionism, and you'll see why that happens in just a minute. Why did he do it all? Why did he do it in 2017? All of a sudden, China not his friend, but somehow Russia and Putin think of Trump's care. I don't want to make it political, but he did it in 2017 because he did not believe that what was happening was correct. And so we went further and further and further into debt, another $15 trillion just over the last 4 years, the biggest amount of debt we've ever cured in any 4-year history in history from 2020, 24. And we can't keep up with that. And I'll tell you why we can't keep up with that, which is why he did the tariffs. And I'm going to cover that in a little bit more detail. So often called an economic protectionism. So tariffs are imported on goods to make them more expensive. So when we put a tariff on an item coming from a different country, it makes whatever that product is more expensive. So let's say that maybe that product was $10 a piece and we put 100% tariff on something like that. Well, that now makes it a $20 item that the company here in the US has to sell that item for. So it makes it more expensive. But drawback to that, or I guess the positive and the drawback, either way you want to take a look at that, it does make the item more expensive, but it causes domestic goods to become cheaper than imported goods. So I think President Trump's goal here with these tariffs isn't just to put a tariff on. I don't think that's really what he's after. I think he went after these large tariffs as a negotiating tool, because that's what he does, come out really hard and just say, bam, negotiating tool. It's no different than if you're out there trying to buy a house and someone says, what's the price of that house? They say, well, that house is $750,000. And you say, I'll give you $600 for it. Right. So it's negotiating. They start high, you start low, and you negotiate till you find out what it is that you want. And by them coming down and you coming up, you can say, well, okay, I'll pay, instead of 600, I'll pay 675, but I also want this, and I want this, and I want this. I'll say, no, I won't give you that, but I'll come down to 10. And so it's a negotiating tactic. So that's all that's really going on right now, but it's more so than just the tariffs. The tariffs are just a piece of the puzzle, and I'm going to cover that, things that we can do to actually make money off this. How does the government get money from the tariffs? That's a good question, Herb. The money that is paid in the tariffs. So if Don and Kendall from Protect Wealth are ordering a bunch of papers and pens, from, let's say, China or Vietnam or someplace wherever they're coming from. Whatever that tariff money is actually paid to the U.S. government. So the U.S. government uses that as actually income. So that money that's paid out through tariffs goes to the U.S. government, and it just comes right off of when you buy the product on the shipping. So tariffs on imported goods causing. So what this does then, in a sense, if the tariffs become too high, it makes potentially the U.S. goods here that are produced here in the U.S. a little bit less expensive. Because if we compare something that's $10 here versus, let's say, $6 in China, okay, well, why don't we order it from China? Because it's going to be cheaper, and we are a retail economy here in the United States. We're always looking for where's the best deal. So we're going to buy that $6 item from China. But if that's now causing U.S. employees or U.S. employers to no longer have businesses, which means there goes a big part of the tax system, because that business goes bankrupt. You don't have employees working there. That employee doesn't pay any type of taxes because we're ordering it from different countries. That's negative impact on the U.S. economy. So if we put a tariff on that item, and now that item's going to cost $11 because you bring that item at $6, you put a tariff on top of that. Now it's going to be $11 to come in from China, but it's only $10 here in the U.S. What do you think we as a U.S. economy, U.S. consumer will probably do? We'll buy that item from the U.S., which then creates jobs, which then creates tax revenue, which then creates businesses, which those businesses pay tax revenue, and it starts to build our economy back up again. Al, hey Al, good to see you again. Tariffs don't make goods less expensive, just possibly more attractive. That's correct, Al, and I'm going to talk a little about that as well. But good to see you, Al. I haven't talked to you for a while. Good to see you. Causing at that point, then we're going to start to build investments here in the U.S., employment, industrial growth, all the things start to kind of blossom back up. And then the government gets to keep that money from the actual tariffs. So higher tariffs and consumers. So would higher tariffs tax consumers? Absolutely, 100%. A tariff actually is, and you hear it over the news over and over and over, a tariff is a tax on the consumer. It is, because you're paying that tax. So if you're buying something from another country, you're going to pay the initial cost of that, plus you're going to pay the tariff on top of that, because it's going to be passed along to you. That money then goes to the U.S. government. So it's a tax, but it goes to the U.S. government. It's just another form of taxation. But it's too simple to say all by itself that higher tariffs would tax consumers. That's assuming just a straight on that we don't do anything other than that I'm going to buy that product no matter what. And in today's economy, I don't think that's pretty much really what we're working with. It would just be another way of saying, hey, if I have a choice of buying something here in the US for $10 and I could buy it over here in China for maybe $6, obviously that's a pretty simple item. But what if we put a tariff on whatever's coming from China? Well, it doesn't mean I'm going to buy that item from China. Maybe I'm now going to go to Brazil, or I'm going to go to India, or I'm going to go to Vietnam, or I'm going to go someplace else, and I'm going to get that item from someplace else. I'm still going to be, as a consumer, where can I get that best deal? It doesn't mean I'm going to pay that tariff, right? And so if you walk into a grocery store and you see two items on the shelf and you see, oh, this is a box of Cheerios over here for $4, and then over here is a different box of Cheerios from a different manufacturer, but it's no longer Cheerios, it's called Cheeriettes or whatever it might be called. But you look at the ingredients, they pretty much look the same. This was $4, this is $3. You don't have to pay the $4 one. You say, I'm not going to buy this one over through here. So do tariffs tax consumers? Yes, but that's assuming you're going to buy that product from that tariffed item. And as a consumer, I'm not simply sure I would. Doesn't mean that I have a choice at first, but as time goes on, I'm going to have many more options as they go through that. But tariffs would then, if they go through that, require more jobs here in the U.S. So if we have tariffs coming across there, what I think President Trump was trying to do, let's bring business back to America. And I'm going to show you some of the businesses that are already coming back to America. So if we bring businesses back to America, where the products are now going to be built here, and I think that's the goal, is to bring in our jobs back to the United States. Those people then again have jobs. They'll pay taxes. Businesses will have more product. They'll pay taxes. All of it kind of works back into the United States, also causing more skilled labor here in the U.S., which would also give higher salaries to offset some of those tariffs that might still be out there. Could also lower the cost of goods, as other countries will then start to lower their tariffs against us in order to do business with us. So we know right now there's a big tariff fight between China and the United States. Who's going to win? I don't know. And it's not my job to know who's going to win, because I don't know everything that's happening behind the scenes. All I know is that both countries have their viewpoints for what they're trying to do. So as those two countries fight, other countries are going to say, well, you know what? If the United States isn't going to be doing business with China anymore, I want them to do business with us. We just saw this last weekend that Vice President Vance and his family went over to India. So what do you think happened with the markets today when the news came out? Hey, there was a very productive meeting in India between the Prime Minister Modi and Vice President Vance. Stock market went up, it rallied because, oh, maybe there's a chance for we're going to do a lot more business with India because we're going to drop maybe tariffs. Maybe there'll be a free trade between the two countries. I don't know. I wasn't involved in any part of that, but that caused the stock market to go up, right? So there's always going to be other countries that are going to want to do business with the US because we are the number one consuming country in the world. We buy more products from any place else is the United States. Everybody wants to do business with us. So if one country says no, other countries will step up and take that place. Will it happen overnight? No, it takes a while. But if that happens, we start to do business. In the meantime, we then start to bring some of those businesses back to the United States, and it can build up from there. Many of the goods getting hit with tariffs do not have U.S. producers or manufacturing facilities capable of replacing. Your information is only one half represented. It's not a selective view of products either. That's a good point as well. I'm just giving you the first 7 minutes of the presentation, Adrian. So let's go ahead and wait till we get to the very end of this. I'm not your economics professor. I'm an investor. I'm telling you how the markets are going to work. Everybody will have their own view on how this works. Whether you agree with me or not, that's really up to you. I'm just going to tell you that as an investor, what do I need to look at in order to make money? So right now I'm talking about what is a tariff and how do they work. I'm not going to say that I'm going to be part of the Fed. I'm not a Fed governor. I don't have access to all the information. I'm just going to keep this fairly simple. So if you want to turn this into a debate, that's great. I'm just not going to use this as a debate. I'm covering the basics on how tariffs work, why they're there, and then how we can make money off of that. So please understand that part of it. You think Jamie Dimon cares? I think Jamie Dimon does care. And in fact, I've got a couple quotes from him in this presentation about why he cares as the largest U.S. bank in America and the fourth largest bank in the country, in the world. So tariffs could also lower cost of goods as countries lower their tariffs against us in order to do business with the United States. So some places that we might be doing business with now, we have a tariff. They might drop those tariffs down to zero in order to do business with us, making the products, again, a little bit more feasible. That's an if. Whether it happens or not, I don't know. So we have to wait and see. But there's still things we can go back and do. So would higher tariffs tax consumers? Yep. Over time, the consumer market will find goods and services from different countries, providers that offer the best prices. So just because we start slapping tariffs on different countries, and they slap tariffs on us, doesn't mean that we have to continue to do business with those items. As a consumer, we will over time find what is the actual best one for us. What if the previous price was agreed to and a new price is identified, including tariff increases? That could happen. And I don't know who anonymous attendee is, so I appreciate it if you go ahead and just change your name. Just go up and click on your name and change it to whoever you are so that I know who I'm talking with. This will replace countries that refuse to deal with the U.S. and in doing so, remove any self-imposed tariff taxes. So as we start to do deals with different countries, we'll find out, okay, well, what items can you offer that we might not be buying from you? So we might be buying a lot of things from China right now, specifically because it's the best deal, but maybe India makes something similar that we just weren't actually buying from India because of whatever reason that we might find out, hey, other countries manufacture something similar to that we can use in its place. This will then start to replace countries that refuse to deal with the U.S. and in doing so, remove any self-imposed tariff taxes. And again, does it have to happen? No, but it could. So my point is simply this: as I go through this, tariffs are there. They're not going to be dropped to zero. Some countries will still have them, but it doesn't mean that you have to do business with any of those countries that are using that tariff. Right. So if you want to buy a car and you can buy a car here in the US, and I'm just making up numbers, for $25,000, or you want to buy a car from a different country that's going to cost you $45,000, it's your choice whether you pay for the $25,000 or the $45,000. That's a choice that you make as an individual consumer. Right. So tariffs as a tool. So tariffs have been around for a long time. It's not like they're new. You know, people get upset. I can't believe we're putting a tariff. It's not like they're new. They've been around forever. In the 19th century, they were used as the premier defining trade policy in the United States in the 19th century. They were used to keep personal income taxes at zero. So it wasn't really until later on that we started personal income taxes. Tariffs are also used to protect industries against its more established trade partners. So we use them quite heavily as the United States when we first became a country. In fact, it was our main source of federal revenue were tariffs when when we came out. They started officially in the US in 1789. It was the second piece of legislation passed after the US Constitution was ratified. Second piece of legislation passed after the US Constitution was ratified. In order to gain economic independence from Great Britain the US needed to protect its new manufacturing centers. So what they did is they put tariffs on everything that was coming, especially from Great Britain, so that we would start to build up our own manufacturing centers here in the US so we could actually become a global power. So trade partners then, when they saw the tariffs coming against everything, trade partners, other countries came and said, hey, we're going to come and set up businesses in the US. And that gave us a big jump start on what we're doing. And we used tariffs in order to do that, to save our own economy. So it was really, really popular. So we kind of go back for it. The average tariff, going back from 1800 to 1900, here's a graph through here, was about 45%. So between 1800 and 1900, the average tariff on all imported goods into the US was about 45%. So again, they're not new. They've been around for a long time. We just dropped them right after the Second World War. And I'll tell you why we did that and how everybody else kept their tariffs up. So my point is, I don't want you to be afraid of tariffs. They're not like they're brand new. They've been around for a long time. We just haven't been used to them in the last 20 years or so, simply because we didn't need them. We do now at this point. So tariffs work between 1800 and 1900. Tariffs work so well, it helped turn the US manufacturing system into a global powerhouse. Tariffs also made up about 90% of the entire federal income budget. So there was no need for any personal income tax, permanent income tax, until 1913 when the 16th Amendment was passed. So think about that. From the time we became a nation until 1913, there was no permanent income tax because tariffs from other countries, product coming into the US, paid 90% of all federal income money that needed to be spent for everything was coming from tariffs. Only 10% needed to come from some type of taxation. Isn't that crazy? So we used it effectively as a country. And then it changed. So tariffs between 1900 and 2025, they were still pretty good. They're still hovering around on average 40-45% coming through here. And it wasn't then until after World War II that it started to drop. Big change after World War II. And the reason for that is that we were such a global powerhouse and such a manufacturing center after World War II. You know how the baby boomers came out? We came in through a big economic boom. Well, a lot of other countries didn't have that. They were decimated by what happened. You know, buildings were gone, things were blown up. They just didn't have all the same assets that we were able to have at that point of time. So we dropped the tariffs in order to let those countries build themselves back up, to give them strength, to give them a little economic power to build themselves back up. So we dropped the tariffs, and they started to come all the way down. You see, they came all the way down here, below 60, below 10% here. Now you're getting to the 60s, 70s, 80s or so, and we're down about 5% on average for the tariffs. And the reason for that is we just didn't need them at that time. We were in such an economic gain, a powerhouse, that we just didn't need the tariffs on our end, but we allowed the other countries to put tariffs on us because we were so strong. So it worked well for a while. It did. The US came out of World War II as a global manufacturing powerhouse. Many other countries needed time to rebuild their manufacturing and their economies. So tariffs were placed on many imported US goods. At the same time, the US was dropping or eliminating all of our tariffs. A lot of that happened. So really right after World War II is when it started to change here for us. And that worked pretty good. Other countries then started to grow their economy. They continued many of their tariffs against the US and started to even raise them over the decades. For the most part, the US went along with it and didn't do anything about it. But then we come to today. So think of it this way here. You're a business. So for all of you watching here today, you're a business, you're doing well, your business is growing. You are the 800-pound gorilla. What if China tries to weaponize tariffs and retaliate by dumping our T-bills? Could it possibly happen? It sure could, Charles. And I should have time at the end to maybe talk about that too. So your business is running well, and you are the big 800-pound gorilla in your industry. Everybody knows who you are. You're kind of like a McDonald's, let's say, and you just control pretty much everything in what you're doing. And there's a lot of other little restaurants that try to get up and get started, but they can't get going. They can't get going. So they get maybe some type of subsidies to kind of help their restaurant get going. And over time, they get going, but we're not worried about them because they're so small. Your business, your big restaurant, whatever it is doing so well. You're not concerned about all those little restaurants that are trying to get started. But over time, they start to get better and better and better. And you start to rely on the fact that you're the 800-pound gorilla, and you get a little bit lazy. And so they start to slowly grow and slowly grow and slowly grow. And then they start to team up together. And then they start, oh, now they're coming against you. And now they're getting to be big to where they rival you as a group. And they go, oh, okay, well, that's okay. But over the years, you haven't really been paying attention because you were the big 800-pound gorilla that you started to kind of go off track a little bit and you start getting into debt and you think, oh, as long as I got money, things are okay. But you get further in debt and further in debt and further in debt and further in debt. And then you start getting a little bit nervous. Hey, I might actually go out of business. And then you look at everybody coming after you because they're growing so fast. Now there's a good chance that they're going to actually overtake you and put you out of business. And that's kind of what's happening to the United States. We were the big 800-pound gorilla after World War II, and all these little countries that you use tariffs to kind of grow and grow and grow, and they started forming other countries or other economic unions, things growing together, central banks moving together, working together as a team, and now they're working as a powerhouse against the United States. And we are so far in debt that we don't really have the ability to go back and fight them because of how much debt we have. And that's what's happening right now, and why President Trump is using tariffs as a negotiating tool. He's not using them to get out of debt. He's using it as a negotiating tool, and we're going to talk about that and how we can go ahead and profit off of that. So that analogy is kind of what's happening with the United States compared to the rest of the world, that everybody else started kept on growing because they had that protection from the tariffs, and we didn't care about that until finally we turn around and look, hey, they're right next to me. They're just as big as we are, and they're not in the same kind of debt we are, and they're continuing to grow, and they have all of these tariffs against us, and we don't have anything against them. How do we get out of this? Because we're about to go bankrupt. And that's where we are today. So now, this was as of 2022. This comes from macrotrends.net. It's a US website for macro trends. And it talks about tariffs charged to the United States and what we charged other countries in 2022. Now, the reason I have China up here as of 2022, their tariffs against US imported products were 67%. Now, when I go back and look at what were the actual tariffs that we charged China in 2022, which were the last full results had here on macro trends, they varied. They went anywhere from, 2.3% up to 30%, but it wasn't across the board. If you looked at across the board, it was 2.3% across all items imported from China into the US, what our tariff was for them. Some items were more, some items like, electric vehicles now, were 25%, and some items were 0%. So I don't have an accurate number through here. But China, 67% tariff, and we had anywhere from 2 to maybe 5% actual imported tariffs on China items here in the US, but they were still charging us 67%, even though they were getting $400 billion more in sales from their products to the United States than we were getting from them, because they wouldn't allow us to sell our products in the United States or in there. The European Union was charging us, as of 2022, was charging us 39% tariffs, and we were charging the EU across the board on average 1.48%. Vietnam was charging the United States 90%. If we wanted to sell anything in Vietnam, it was 90% tariff, and we were charging them 1.34% tariff. Taiwan, 64, 32. Japan, 46. We were charging them 10. India was charging us 52% tariffs. And you can understand why. I mean, you go back and we talk about global protectionism, economic protectionism. If you're India, what do you want? I mean, you want to bring everybody that's third world or doesn't make any money, that lives off of maybe $50 a month type of thing. You want them to come up and their economy to come up. So what do? You make sure that they have a job by making sure that you're not importing products to India. So they put a tariff on us, and you understand that. We had a 3% tariff. South Korea, 50%. We had 0. So you can kind of just go down the board. Thailand, 72%. We had 10%. You go down the board and just kind of see what we were charging and what everybody else was charging against us. They had these huge tariffs on us over and over and over and over again that we had to pay to do business. The whole point was they didn't want us to bring US product into their country. They wanted to sell all of their products to us at a very low tariffs. And so got to the point where we can't keep that up because we're losing jobs here in the United States. Things are going elsewhere. We want to bring business back to the United States. And I get that. Every single country wants that, not just the United States. Every single country wants that. So President Trump said, it's not fair what's going on. So he put these reciprocal tariffs. So European Union was 39%. We moved up to 20%. Vietnam, we were at 1.3, moved to 45%. So these are reciprocal tariffs. He said, I'm going to increase these because of the amount of business that we're doing with them. We need to make sure that we bring some of that business back to the United States. So these are the reciprocal tariffs just put on some of the items. He did quite a bit more of these, but these are the top ones that kind of came through here. So you can see what we were actually charging everybody over the years. I mean, the European Union on average, 1.48% tariff, and they were charging us 39%. Is that fair? If you have business and you're doing business with somebody, and every time you want to buy their product, they charge you another 39%. And when vice versa, You only charge them 1.48% extra. Would that be fair? I don't think so. So you can kind of see where it was going. So it gets to the point where we are so far in debt, we can't pay our bills anymore. So we have to make a change. And that's why some of these are coming out here right now. It's a negotiating tool. So the tariffs aren't just saying this is what it's about. It's about what else is included in the negotiating tools in order to make this free. So tariffs are still currently being used to pressure other nations to help minimize illegal immigration, drug trafficking. That was the first thing that started with President Trump when he went to NAFTA, which is North American Free Trade. He said, oh, I'm canceling that, and we're going to start charging a tariff. And he wasn't saying I'm charging a tariff just to charge a tariff. He said because it's costing us money because of all the illegal immigrants that were coming across the country. Like someone's got to pay for that, and drug trafficking, things like that. And so it's costing money. So he was going to use an increase of tariffs to pay for that. That's really what they started off with. It's also being used to thwart threats to the US dollar, which is a big reason the tariffs are out there. It's not specifically because I'm looking for that little bit of extra money that's going to come to the United States, but our country is going bankrupt. No ifs, ands, or buts about it. Here's the current debt as of January 25. This is off of the federal website here for the United States government, source US Department of the Treasury, and it talks about where we're at here. And the last 4 years, when it kind of went up here, $15 trillion in the last 4 years. It's the biggest gain we've ever had in our entire history in a 4-year time period. And why did we get $15 trillion more in debt? Where'd that money go to? What was the reason for it? And I'm not making this political, because even when Trump was in power, he increased the deficit as well. So there's nothing about politics here. My point is, what point do we become so far in debt as a country, you can't pay the bills anymore? And when you can't pay the bills anymore, then your question was, Charles, will they start to weaponize it? Will they start to sell T-bills and things like that? And the answer is, yeah. What does it stop BRICS countries from choosing other suppliers? Nothing, other than the simple fact that we are the largest business in the world. And if you want to do something with somebody, who do you choose? You choose the United States. But it's not just about tariffs. So, when you have the BRICS companies that are out there, Brazil, Russia, India, China, when you have these other companies that are out there, I'm sorry, anyway, you can do business with somebody else, but who do you really want it from? So it's not just the fact that, oh, I can go ahead and buy a bag of potatoes. It's what else is associated with that they need at this point of time. And a lot of that comes down to the International Monetary Fund. A lot of that's going to come down to the US funding for a lot of different items. So there's more that plays into it. That's why the tariffs are such a big deal, because there's a lot more than negotiated that goes into it than just other than I'm going to slap a tariff on this product. It was just used as negotiation so they can talk about things like that. So that was part of the reason. So from us going bankrupt, our country's currently going bankrupt. So here's Scott Bessent, current U.S. Secretary of the Treasury, has declared multiple times the U.S. economy needs a detox as the current trend is unsustainable, meaning eventually we're going to go bankrupt. Our economy is simply being propped up by the Fed printing money. It's the only reason we're still in business right now is because the Fed prints money. The Fed goes to the Secretary of Treasury and so the Treasury Department says, print up more dollars. I need another $800 billion. And the Treasury Department can't say no. The Treasury Department has to print $800 billion, give it to the Fed, and the Fed then loans it back out to the banks to help pay the bills. It's just money that's being printed. It doesn't come from anywhere. There's no asset that backs it other than the U.S. government says, we promised to pay it back at some point. Whether we do or not, couldn't tell you. We don't have to. We could default on it anytime we want because there's no asset that backs it. It's simply the fact the Fed says print up more money and the Treasury Department has to print it up. They can't say no. And that's the only thing that's propping up our economy right now. If that went away, our country would be bankrupt because we cannot pay the bills. We don't have enough money coming in to offset what's actually going out. Here's Jamie Dimon, JP Morgan Chase CEO, largest bank in the United States, fourth largest bank in the world. Jamie Dimon says the U.S. is speeding towards a cliff, which means our country's going to go bankrupt. We see the cliff. It's about 10 years out. This was January 2024. We're going 60 miles an hour towards it. In other words, we're driving 60 miles an hour towards a cliff and we're doing nothing to stop it. As the nation's runaway debt continues to mount, Jamie Dimon, markets around the world will collapse because foreigners own about $7 trillion of the U.S. government debt. There will be a rebellion, and that's the worst possible way to do it. In other words, you got our current Secretary of the Treasury and the CEO of the largest bank in the United States saying our country's going bankrupt and we cannot go this route. We're heading towards a cliff. It will bankrupt the U.S. economy and many other countries who hold a lot of our debt and do business with us. Argentina has declared bankruptcy on multiple occasions. Supposedly 50% or more of the population lives in poverty. Is that the fate of the USA. I can't get into that. That's not what this is about. Why push so hard on China? So why is President Trump just pushing so hard on China right now? Here's Kevin O'Leary. He says, I've been talking about this for years. China is cheating, stealing, ripping off IP, intellectual property, wiping out American companies. Many of them are mine. They don't abide by any IP laws since they joined the World Trade Organization, WTO, in 2000. Never 1 week were they compliant. There are thousands of complaints against them. You know that currently China, you can just go ahead and type it up on your phone. What percentage of iPhones sold in China are fake? And that number is right around 30%. So 30% of iPhones sold in China are fake. They even have fake iPhone stores. And the reason for that is China doesn't have a problem with stealing IP. There's no real laws against that. You want to go ahead and bring something out there, and China says, okay, go ahead and bring it out, and then they will copy it, and they will start to turn around and sell it for themselves, and then put you out of business. And it's legal to do in China. They don't have the same rules that we have to play here with the United States. And so that's one of the reasons that President Trump is pushing so hard on China, is because they're not playing on an equal playing field. And that's why he's pushing so hard against them to make it that way. It wasn't so back in the 50s and 60s and 70s, but they grew and they grew and they grew and they grew, and they far surpassed everybody else. And they're now our largest competitor. We kind of go back out through that. So President Trump just wants to make sure that there's an even playing field as you go back between them. So what are some of the Chinese companies then, as we need to pay attention to? And we're going to pull up some of these on some charts and take a look at these here. What are some of the companies that might be affected by these? And so these are actual Chinese companies that are listed on the US exchanges. However, there are no US companies listed on the China exchanges, not allowed. Again, that's part of that playing field. So Alibaba, we've all heard about that. Ticker symbol is BABA. These are stocks that if the trade war continues, that you probably might not want to own in your portfolio. So if you have somebody managing your portfolio or you're doing it yourself, this might be a stock you want to go back and take a look at, because it might not be one you want to own. Because if it's a Chinese company listed in the US and all of a sudden we stop doing business with China, these stocks might, one, be delisted, taken off of the actual US exchanges, or drop in value because they're not getting as much business anymore. JD.com, ticker symbol JD, Baidu, ticker symbol BIDU, NIO, PDD Holdings, so PDD. So these are all companies that are Chinese companies on the US exchanges. The majority of their business is in China, but they do business here in the US as well. So if you have any of these in your portfolio, I'm not saying to sell them. I'm not doing anything to say one company is better than another company. I'm just saying these are companies that have a better chance of continuing to drop in the future if there's no type of trade agreement with China. So just things to be aware of. Some of the US companies that do at least 15% of their sales in China are Nike, NKE, Amazon. Pull up some of those stocks and just kind of quickly take a look at them. Let's go here, share my screen. Here. So let's see if I got Nike. Let me log back in. I'm just pulling up some charts is all I'm doing. So Nike, NKE. Let me take a look. And you can see since we started, all the things come down. You can see where they kind of
Mike, I don't think we're seeing your screen there.
What's that?
I think you get to share your entire screen rather than just the PowerPoint. If you can see my screen, oh, there we go. There we go. Got it.
Is that better?
Better.
Yeah. Okay, so here's Nike. So you can see that ever since kind of the trade tariffs kind of went out there, Nike just dropped, and now just pretty much going sideways. And again, these are just companies that a lot of their products are made overseas, but also at least 15% of their business is done actually in China. So these are stocks that might be in your portfolio that you don't know. Maybe somebody's managing your portfolio. Just things to kind of be aware of that you want to go back and take a look and say, maybe I don't want to own these stocks currently. I want to be able to maybe move to cash or something else. But these are some stocks you say, maybe today, I just don't want to own them today. I'm not saying sell it. I'm just saying maybe ones you don't want. Please say more about the Coval indicator. The Coval indicator, this section right down and through here, is a proprietary indicator made up by some gentleman named Mike Coval, which is me. And it's 17 different indicators that I liked that I just put together into one algorithm to teach you buy and sell signals. So anytime that they're low, like they are down here, right down through here, and you have a green arrow, it means there's a chance that's probably ready to start a little bit of a bounce. Anytime that the Cold indicator is high right up and through here. Then you got a red arrow, means whatever stock you're looking at is probably going to drop a little bit. That's all that it is. So think of it just a little bit like the MACDs beneath that. If you got a red arrow, whatever stock you're looking at, really good chance it's going to drop. If we just go right up in time when that happened, let's go right up here in time, cold indicator right through here. When you got the red arrow, what the stock do? Sold off and started to drop. So anytime you got a green arrow, you're probably about ready to bounce a little bit, and stock went up in value. That's all it is. Just a proprietary algorithm, something I made on my website because I like it. And I didn't want to have 17 different indicators on a chart. I figured you only need 2 indicators on a chart. You go to the doctor says you're sick, get a second opinion. You don't need a 4th and a 5th and a 6th and a 7th and 8th. Second opinion is fine. So chart, proprietary algorithm, and then the MACDs, which is a Nobel prize winning formula. So why not have it on the website? It's used quite extensively in the stock market. So Nike, you have Amazon. How's this one look? And I like Amazon, but they're not just strictly, Amazon web. They've got servers and things like that too. But how does this look right now? Is this something that you really want to own? Probably not. Look, which way is it going? Lower, 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 lower. It doesn't look great. So there are some stocks right now that currently trade on the U.S. exchanges that have at least 15% of their actual revenues coming from China. And so maybe until we get some type of trade deal, might be some stocks you don't want to get into. We've got Qualcomm, Caterpillar, Starbucks, QCOM. Again, not great looking chart. Caterpillar. How's that one looking for us? Again, not the best looking chart. Dropping, 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 dropping. Tried to bounce, didn't really even make a bounce. So if I just kind of go back to those charts, my whole point was simply there are some stocks you're probably going to want to be in, and there are going to be some stocks you don't want to be in. I'm not telling you what to buy or what to sell inside your portfolio, and I'm not making this political in any type of way. I'm just saying tariffs are there. They're used as a negotiating tool. How they come out, that's between our country and another country. All I know is it's going to happen one way or the other, and there's going to be some things that we can make some money off of. So these are the ones you probably are going to want to stay away from as negotiations going through until we get some type of benefit from the tariffs, or China says some type of agreement, or the president says or the United States has an agreement with China, whatever it might be. I don't know. But today, Treasurer
Hey, Mike, we lost your screen share again.
Oh, did we?
Yeah.
Well, that's happening.
I don't know. I can see your mouse, though. It's kind of weird. There we go. Okay. We're back.
Okay, good. So the point is, you're going to take a picture of this, or what are you going to do with these charts around here, these stocks? Just be aware of them. It's not the best time to actually own these right now. There's nothing wrong with selling them, moving out, moving to cash, or doing something else with them. If you're going through any training with us, we teach you how to write in the money cover calls to make money as they pull back, so you're not really losing anything. But these are some stocks that are going to be affected by any trade consequences with China. Scroll down a little bit lower through here. If we get any kind of a completed trade deal with any other country, these are some of the ones you might want to take a look at. So these are actually ETFs. It's an exchange traded fund. Think of it as a mutual fund that trades on the stock exchange that's built up by many different companies within an area. So if you wanted to say, oh, maybe we get a trade deal with China, and you don't know what stocks you go to look at, you go look at the ticker symbol FXI, which has multiple different Chinese stocks, including Alibaba in it, that are in there, in one individual stock. So you can trade them think of it as a mutual fund, but it trades like a stock. You got Brazil, you got Japan, EWJ, South Korea, India. So if I take a look right now, if I go back, take a look at India, this looks really good. Why do you think India looks really good right now? And some of the other ones don't. Anybody have a reason for that? Share. Let's take a look at the ticker symbol for India. And you see charts now, Kendall? Charts?
Yes, sir. Looks good.
Oh, cool. Right. Here's chart for India. Ticker INDA. If I scroll down, we can see that it was selling off.
We lost it, Mike. I don't know what happened. That's weird. It comes and goes.
I'll share it again. Yeah, it's kind of weird. Something's going on with Zoom then.
Screen one. It's China. What did you say? It's China, Mike.
I don't know if it's China. It could be Russia. It could be North Korea. Could be anybody on this presentation saying, "Zap it, zap it."
Zap it, zap
I don't know.
it.
But here, if we just pull up maybe like a 3 month chart, you can see that what's going to happen over here with India. So the rest of the market doesn't look great, but where's India going? Up, 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 up. And where did it go since this weekend here? Everybody knows that, okay, JD Vance going to India Friday, boom, Monday, Tuesday, where we are right now, breaking out, moving up to the upside because there's a chance that we might get some type of a trade deal with India, and it's a large country, which will be good. And so if we can replace some items coming from China with India, not everything, but some things, that's good for India, and say, oh, well, maybe the whole stock market's going down. Doesn't mean everything's going down. So you can see the chart here. INDA is the ticker symbol, and this has got multiple stocks, companies from India in one individual item. So we can just buy one ticker symbol, INDA, and we can have the entire India stock market in one individual stock. So the point is, there are always going to be stocks that are going to do well in any kind of a market, whether the market is up, down, or sideways. So I'm just going to make sure I share this one twice, see if it goes. Screen one. Here. Okay, good. So Mexico looks good right in through here as well. So take a look at Mexico, looks okay. Europe, Canada, Taiwan, Germany, Australia. So there's a couple good ones on here. You got like EWU is a not a bad looking one for the UK. EWI for Italy. There's a few of them on here that look okay. So point is, as you're going through the news over the next couple of weeks or so, and you say, oh, we just struck a trade deal with boom, now go back, it's going to be good for their economy. Go back and then say, oh, maybe that's the ticker symbol I want. I'm going to be diversified if I buy EWZ because it's the biggest companies in Brazil all in one individual ticker symbol. You don't have to go back and say, what stock can I buy that's maybe on the US exchange? These are all stocks traded on the US exchange. They trade like a mutual fund, but they're an actual stock. So which countries do we might start doing more business with? Well, right now, India is the big one. It looks like we might get some type of agreement with Mexico as we go through that. EU, a lot of agreements are already going through right now with the EU, so things look really good with the European Union. That's EU. UK, which is Great Britain. So those are kind of some of the ones that are looking a little bit better for us right now. So kind of keep an eye on them. In the meantime, you can just go ahead and just type up these ticker symbols in some kind of a watch list with any kind of a brokerage firm you use right now, and just keep an eye on them, see which ones look good. And then when you hear the news and say, oh, we signed a trade agreement with boom, Mexico, then go back and look at the ticker symbol EWW, because that's what you might want to have in your portfolio. In the meantime, as you're going through that and seeing kind of what's going to be out there inside your portfolio, wait for the trade deals. There's already lots of talk about businesses coming back to America. This is just in the last 5 weeks, just the last 5 weeks. Taiwan Semiconductor already announced $165 billion that they're going to be investing going forward in the U.S. Johnson & Johnson is going to spend $55 billion in the U.S. Abbott Laboratories, $500 million. Eli Lilly, $50 billion. GE Aerospace, $1 billion going to be spending in the US in the next few years. Apple's going to spend $500 billion over the next 4 years building new items in the United States. Not the iPhone, but a lot of other services that go along with that. Hyundai cars, $21 billion in the US. NVIDIA, $500 billion. These are all things that happened just in the last 5 weeks. A lot of it happened after President Trump said tariffs are coming, and other big companies said, we can go ahead and say we don't do business with the US anymore because costs are going to go up. But you are the big one in the world. Everybody wants the U.S. marketplace. So instead of building in other areas, we're going to now build in the U.S. Now, when they build that, there'll probably be other concessions to build that, where we might give them some type of tax advantages, things like that. But you have all these companies, Japan investing $1 trillion in the U.S. Honda Motor Company said they're going to start building the Civic hatchback. These are all just in the last 5 weeks. And so it doesn't mean it's going to happen today, but if all this comes back to the United States, what happens then? You've got high-tech jobs coming to the United States. U.S. citizens will get a job, will have a wage. They'll start paying taxes. Businesses will pay taxes, correct? As they get through that. Then what we start to do, we start to then lower that debt. And that's the whole goal. Because if we don't do the things that President Trump is trying to do now, you've got the CEO of the biggest bank in the United States, fourth largest in the world. You got the Secretary of the Treasury all saying our economy is going to go bankrupt, and that'll cause global devastation because so many other countries actually own our debt as well. And we just can't do it. You have to do something. So what do? Do you say, oh, we're going to have a meeting, we'll talk about it next month, and then maybe we'll have another meeting after that and talk about it? Or do you just say, I just got to go for it? I don't know. I'm not the president. I don't know his strategies. It seems weird to me. I'll be honest with you. Why not just start with one at a time, right? I don't know. Obviously, he's got some type of a reason for what he's doing. At least I'm hoping that he does. But in the meantime, I can still make money. So what can we go back and do? I can start looking at any of these other countries that are out there and say, which ones of these are going to make me some money? Where can I start to put some of that money? Some of the other places I can start to put some money, I can look at things like gold. Gold's looking really good. In fact, gold hit an all-time high today, all-time high ever in history today. Why is it looking so good? Because of flight to safety. People say, I don't know what's happening in the marketplace, but gold's going up. I'm going to buy gold. Utilities, the ticker symbol is XLU. Now, XLU doesn't pay a lot, but if I just go back and take a look at this, utilities are stocks that people buy when they're nervous, along with consumer staples. So the ticker symbol XLU and IYK. So XLU is an ETF that covers a lot of really large utility stocks. Now, utilities can't grow for the most part. I'm here in Florida. Florida Power and Light, FPL, is the major utility company here in the United States, or here in Florida. So they don't get to say, oh, we're making some profit. Let's now go to Georgia. Let's go to Texas. Let's go to Colorado. Let's go to New York. That's not how the utility companies work. They get their area, so they still make a profit, because people aren't going to say, oh, just because things don't look good, I'm not turning off my AC in here in Florida. It runs pretty much 360 days a year, and the 5 days it's not working, the heat's on, right? So electricity is still being used. But because of that, they make a profit. So what happens with the profit? Herb, what's Taiwan? It's Taiwan Semiconductor. It's TSMC, Taiwan Semiconductor Company. But utility companies. So ticker symbol XLU is one you probably want to take a look at. They also pay a nice dividend, and they pay about 3% a year. So if you buy the ticker symbol XLU, which is for the most part pretty much just going sideways, you'll get a little bit of profit, maybe 3 or 4 or 5% a year off it, but you'll get another 3% in just dividends that it pays you just cash for owning the stock. Consumer staples, things that we as U.S. are going to buy anyway. I'm going to buy toilet paper. I don't care if there's a tariff war going on. I'm going to buy toilet paper. So consumer staples are things that we're going to buy anyway. And the ticker symbol for that as a group is just IYK. IYK is the ticker symbol for consumer staples. So I'll pull up these ones, and then followed by Bitcoin, which is IBIT. And Bitcoin is kind of along the same with gold. It's just another form of payment. So if people get really nervous, why don't we go ahead and invest in some Bitcoin? Now, I'm a little bit more not as positive on Bitcoin as I'm on gold, only because there's no real asset underneath it other than what people are willing to actually pay for it, where gold has an asset. But it doesn't mean that Bitcoin's not going to go up. So let's take a look at XLU, IYK, and IBIT. And pull up a chart. Make sure we're there again. Okay, so we got XLU. Good question, Tom. Why the date 7/9? And we'll kind of go back to kind of what to look out for. I had that on the previous screen. I'll show it to you where it was at it as well. President Trump started the original reciprocal tariffs on April 9th. And then he said, after a couple of days, we're going to go ahead and pause them for 90 days while we start to work out some trade deals with some other countries. So 90 days from April 9th is about the 9th of July. So that's why 7/9/25 was on there. Whether that's 30, is that 91 days? I don't know how many, is it 3 months, or was it 90 calendar days, or what? I don't know. So I just said, it might be, 7/10, but 7/9 is 3 months or 90 days after April 9th. That's why it was on there. All right, so here's XLU. Kind of scroll down the page. It's pretty much just going sideways, going nowhere. It's not doing anything. It's just kind of moving sideways. But we've had a recent rally from 72 to 78. It's up $6. So you're making a little bit of money up, but it's kind of a stock just going nowhere. But it does pay a dividend. If you buy the stock and don't do anything with it at all, maybe it goes up to $80 and you make $3 on your $70 investment. But in the meantime, you'll make another 3% on your money because the stock actually makes a profit. And when it makes a profit, it has to do something with the profit. It can't grow. It's a utility company. Where's it going to grow to? It doesn't grow to another state. It takes that profit and gives it back to the shareholders, and that's called the dividend. So this is a stock that pays a nice dividend. You've got things like IBIT, IBIT. This would be the ticker symbol here for Bitcoin. If you want to trade it as a stock, Bitcoin, and you see it starting to rally right now. It's had a nice little breakout today as investors are saying, I don't know what's happening with the economy, but let's move back into Bitcoin. We went through a little bit of a ceiling here at 50 and it popped out today on some pretty good volume. So there's some buying going on today. Maybe it's by the institutions as they say, we don't know how long the trade wars are going to go on. Until they go on, let's put some money over here in a little bit of Bitcoin. So you can see it's starting to rally right now as well with some green arrows on the Coval indicator. So that part looks good. Let's go back here, share. And I'm just going to share it twice just to make sure it comes up now, Kendall. I don't know why that was happening, but consumer staples, ticker symbol XY or IYK. So keep that as a stock you might be looking at. Say, I don't know what's happening. This was the question that you had here. 7/9/25. That's when the 90-day tariffs are theoretically supposed to come off. If we wanted to raise those reciprocal tariffs right back up again, that's when they're supposed to be kicked back into it. A lot of people want to go back and trade some currency, and I'll show you a great way to do that and tell you when the U.S. economy is probably going to start to turn around. Dividend paying stocks, right? We can go back to our website again and say, what if I want to find just some really good high paying dividend stocks? How do I do something like that? And we can just use our website to go back now and find some really good dividend stocks by clicking on the stock scanner. I'm just going to go down and say, show me some dividend stocks that pay a decent dividend. So on here, they're ranked. This is the #1 dividends search in the entire United States here. It ranks all stocks that pay dividends, starting from the highest to the lowest. And the first one we have up through here, ticker symbol, Icon Enterprises, volume, how much the dividend actually is, pays about 24% a year dividend. Dividend growth is decreasing, kind of in a downtrend. So if I just kind of scroll down through the page here and we just kind of look and look and look and look as we kind of scroll down, we're just looking for anything that might look decent, if there's anything that we like. So I'm just looking for something that might be in an uptrend, and I'll see if it pays a decent dividend. So a lot of people move to some really good paying dividend stocks as they go through a lot of this and say, hey, I don't know what to invest in, but I don't mind getting paid a dividend, which is just cash, while I sit back and wait. So while I sit back and wait and do absolutely nothing at all, let's look for something that looks good. I can see right through here, JBS, ticker symbol right through here, JBSAY. Pays a dividend of about 7% a year. It's an undervalued stock, and it's in an uptrend. And the dividend's growing 38% a year. So every year that dividend's been growing on average about 38% a year for the last 5 years. So now you got a stock that's in an uptrend, pays a dividend of 7% a year, and is undervalued to begin with. So do I ever day trade some of these items? Yeah, I day trade a lot of things, Kerry, but not for what we're doing right through here for tariffs. But news goes out and changes a lot of that. Here's NWG. NWG right in through here. It's a good stock. Fundamentally, it's a good quality company, trades about 5 million shares a day, pays a dividend of right around 7%. That dividend's grown about 44% a year. It's undervalued, and it's just now starting to move higher and just starting to break out to the upside. So here's a stock. Look at that. When the whole market's not looking good, this stock just broke out now to a new high, starting to move higher right now. Everything looks really good, and it pays a good dividend of right around 7% a year. So there's still some really good stocks you can go out and say, well, what am I going to go out and trade if I'm going to look for something? Where is the stock market going to go? A lot of different things we can go back and trade. Just because the tariffs are out there doesn't mean the entire stock market looks bad. So I can trade some dividends. I can maybe trade some REITs. A REIT is a real estate investment trust. And so these are stocks that hold real estate and they collect money. So maybe a big company goes out and buys a couple apartment buildings and rents out the apartment buildings. And then instead of you looking for a house to buy, you buy that ticker symbol of one of those items. And that ticker symbol actually pays you income every month as it collects the rents. And so these are called REITs, real estate investment trusts. We got a nice section on the website for that.
Lost it, Mike.
Nothing wrong. Yep.
Sorry, I lost it there, Mike. Sorry, it's kind of strange how it goes in and goes out. There we go.
Okay. It looks like I have to do it twice for some reason. I'm not sure what's happening, but I have to do it twice. It seems to work. There's also nothing wrong, guys, with just having cash. If you're not sure what's happening in the marketplace, why things are going around, cash on average, if you have cash in your brokerage account, it normally pays anywhere from 2 to 3% a year. It's called a money market account, an MMA, or a sweep account, SWEEP. So if you have a brokerage account and you sell something that's in a downtrend and you say, I'm just going to liquidate that and get out of that, and you just leave it in cash, you'll make about 2% a year on that cash or 3% a year on the cash. It's kind of like maybe a high yield savings account, but it's still there in the brokerage account so that when it's necessary, it's already there waiting to be used. And there's nothing wrong while you're not sure what's happening in the marketplace. I'm going to go ahead and I'm just going to sell what I have that's in a downtrend and it's moving lower. I'm going to sell it and move out. And I'm going to leave that money in cash. It's just going to sit there. And as the market drops, if it continues to drop and drop and drop and drop, you don't have to worry about it because you're in cash. And then when you finally get a signal where you finally see one of the trade deals come through, then you plop back up to, okay, who just signed that trade deal? And then you go back and look at their ticker symbol, and that's the one you're going to go back and buy. And now you've got all that cash that you're able to buy at a much lower price. And then up it goes, and you start making a nice profit. So don't be afraid of cash. There's nothing wrong with having cash in the account. A lot of people are afraid of that and don't know what they should do. But if you're not sure, cash is a great way to do it. And the last part up here was on here. Just be aware of this date here, because this is when, if we don't sign some type of a trade deal with a country, this is when the reciprocal tariffs kick back in again to hit their economy, and they'll hit ours at the same time. So kind of be aware of that date, because you could see a lot of volatility coming into the stock market right around July 9th, July 8th, July 10th, right around there. I'm not sure exactly when. You said that we paused these reciprocal tariffs for 90 days. Is that 3 months or is it 90 days? I don't know. So just kind of be aware of those. But here's some things, to take a look at that you should do well as the markets get iffy: GLD, XLU, utilities, consumer staples, Bitcoin, any currency, dividends, REITs, or cash. These are all things that are probably going to be okay over the next couple months while the markets kind of get a little bit iffy and see which way they're going to go. Will I share my public facing site address? It's just right here, bottom right hand corner right here. It's incometrader.com. See it right down here on the chart. Just incometrader.com is the site for that. What's the correlation between the US dollar and the reserve currency? I'm just going to kind of go through and answer some of the questions right now. What's the correlation between the US dollar and the reserve currency, and for setting exchanges between foreign nations on the US stock market? Is economy and the valuation of the US dollar. There's a lot going into the valuation of the US dollar, and why right now, if you take a look at the US dollar, you'll see that it's very low. And that's both good and bad. And so one of the reasons that President Trump is doing the high tariffs is just a negotiating tool. And part of that, like I said before, isn't just working out some kind of a tariff to get US jobs back to America. It's also to protect the US dollar as the world's reserve currency, because you've got, like somebody asked a question earlier about BRICS, and they're trying to get rid of the US dollar, and they're trying to replace it with the Chinese yuan. And so with the yuan was kind of out there. So they want things to change. They want to get rid of the US dollar. And if that happens, it's not the death of America. I mean, before us, Great Britain was the world reserve currency, and they're still out there. It's just not as good if we start to replace that, because we don't have the same type of bargaining strength that we have. And so it is one of the things that we want to keep the US dollar as the world's reserve currency. And that's one of the things that's being, I'm sure, used in the negotiations between different countries. I want tariffs to be to this. I want you to make sure that you're buying products and services in the US dollar, so things are settled in the US dollar. I'm sure there's a lot going into that, RJ. I just don't know what's actually going through that, but it is something that I'm sure that President Trump is using for part of his negotiating tactics. A number of brokerages, where did it go? A number of brokerages pay almost nothing. I'm using, I'm not sure what BIL as a short-term safe investment. Oh, T-bills, using T-bills about that. Yeah, Al, depending on what the brokerage firm is. So some will pay more than others. It depends on what they are. But most brokerage firms are paying at least 2% right now at the very lowest ones. You can go all the way up to, if you're using something like Interactive Brokers, IBKR, and they're paying up to 5% sometimes. And then on top of that, whatever stocks you hold, they even pay you margin to you to use your stocks for somebody else. So it kind of goes back and forth based on what you're after. But the point wasn't just say you're doing that because you want the 2%. The point is 2% is better than hanging on to a stock like Amazon that continues to drop. So you might lose 30% on Amazon, but you made 2% in your portfolio because you just left it in cash. That was really the point of that for Al. What about trading futures? Futures are completely different, and I do like trading futures quite a bit. Anything on your site provides more macro level, potentially getting into a bear market. Tom, other than just looking at the actual charts as we kind of go through that, let me just pull up a chart through here real quick. I'm going to do it twice just so that Kendall and Don don't come back and say, where did it go? Now I'm just going to pull up here on the S&P 500, ticker symbol SPX. So I'll pull up here a chart of the S&P 500 index. And here's chart. I got a 3-month chart in here. Let's pull up a 6-month chart first. We were looking pretty good, pretty good, pretty good. And then all of a sudden we start talking about, oh, there's going to be some tariffs coming across. And then the whole market just obviously sold right off. Now, I'm not so concerned if we take a look at this sell-off here. It's going to happen. You got bad news. Where's everything going to go? Who's going to be doing business with it? What are the tariffs going to have? You got uncertainty. Market sold off. And I get that. What I'm most concerned about is after you have the sell-off, then we have this bounce. Let me see if I can write on the screen here. We have this bounce. Okay, that's fine. Okay. And so here's the bounce right here. Bounce right here. Boom, boom, boom. And then first bounce. Now, after the bounce, this is what we're concerned about. So we're going to have sell-off. Don't worry about it. After the bounce, we came all the way back up here to the ceiling, to the floor, came all the way back up here to the floor, came really close. Then we started to sell back off again. And then here started to bounce today. So for those of you who know how to read a chart, tell me what just happened on this, because this is what concerns me the most. It's not the sell-off. The sell-off is going to happen, right? You can't control sell-off. What I want to know is after we've had that big drop, what do I do going forward? And so we had the first bounce, and then after that first bounce, we sold off. That's just normal. Now we had a higher low. So we had a low down here. Then we came up, pulled back. We had a higher low. That is bullish. It means that, hey, we didn't come all the way back down again. We actually dropped a little bit, and then we started to bounce again. That's bullish. That means, hey, that's good news. Investors were buying today, and they were buying a whole bunch today. So what was the reason for that? Maybe it was the visit that turned out really positive between India and the United States. Things are going well with the European Union talks. Things are going well with Japan talks. And then they even had Secretary of Treasury Bessent come out today and say that there's probably going to be some type of a work down on China, which just means that both countries, are trying to save face. And what do we do kind of going back and forth? So all that is good for the stock market. So the fact that we had a higher bounce is positive. Now, if we come back now and we go beneath that, now I'll be nervous about the stock market, and we're just going to say we're going to start heading lower again. But as long as we came back through here and we came back up and we bounced, this is our first drop. Then we rallied and we came back. We have a higher low. That's really good. It means that we're getting stronger and we're starting to buy again off that first bounce. So we like that. So if we can come all the way back up now and move above this line right here at 5,500, that's really good news for our economy and for our stock market. So at that point, I don't want to be in cash. I want to be in stocks. I want to be in things because the stock market's starting to go back up again. But until we can kind of break back up above 5,500, there's nothing wrong with being in cash and just waiting to see which country signs some kind of a deal with us. Marie, what should be the considerations when looking for a stock at a bargain price due to volatility price drop? Considerations kind of the same thing I'm looking at right through here. I would like to see that the stock, as it kind of came down and dropped, is now, wherever it kind of came down and dropped, is no longer making a lower low. I want to see that higher low, just like we did right here. Just like we did right here, I want to see that higher low. So I want that, and then I want to be able to go back and buy that stock, whatever stock I'm after, at a really good price. So I think the stock I did the last Protect Wealth class was Newmont Mining. Last time I did a Protect Wealth class, and generally when I do a class that's on during the daytime, I trade live in front of all the students. I always want to trade live because with my own personal money, not a paper trade account, because that's really the only way that you learn. You don't learn because somebody said, let me show you this one trade I did this one time type of thing. That's garbage. I want to know, how do I actually make that money? So let's erase those. Clear all drawings, go back to here. And then go up to NEM. And this is a gold stock, gold producing stock. So you kind of see right in through here, it drop, drop, drop. So here's what you're talking about, Marie. How do you know if it's a bargain level price? After stock has stopped dropping, I want to see this right in through here. I want to see that we dropped. And after we dropped, we came back up. And then when we pulled back from that first bounce, we pulled back, we had a higher low. This low is higher than this low. And then from there, that looks positive. And at the same time, if I can then scroll down beneath that stock and say, oh, he's had a higher low, and find out that it's a good quality stock, Marie, that's a stock I want to buy. That's how I go back and find out that's something I'm after. Also has a fair value, which is the Warren Buffett calculation price. This stock should be worth $117 a share, and you can buy it today for only about $56. You're getting a really good deal. Isn't the fear about tariffs really coming from the media, Herb? I agree that a lot of it is coming from the media. That's how they get people to watch the media. But it's not all about fear of the media. There are some real concerns about what's going on with tariffs, and it could put us into a recession. I'm not really sure it's going to put us into a recession, to be sure about it. I think that President Trump is going to do everything he can with his administration to close as many deals with as many different countries as they can before those 90 days are up, which will give our stock market a boost. So I'm not sure if it's going to put us in recession. I'm not saying it won't, but if we don't do anything other than just leave things where they are today, yes, I believe a recession is coming. But if we start to close those deals, I don't think we'll. I think that if we start to close those deals, we will be higher at the end of this year than we are today, right? So it's a good question, Herb. You have been always not very strong advocate of mutual funds, Charles, due to the high fees. Some money market tickers are mutual funds paying 4.3%. Would you be okay to have, if there is a way to do this in an ETF form? Yeah, there's a lot of ETFs that pay a really high dividend. And so you can just go right off of the stock scanner right in through here. And we go down to the ETF scanner and just say which ones are called, and they're actually called income fund ETFs because they pay a high dividend. So you got here, Charles Schwab, 3.6%, 3.1%, 5% dividend. These are ETFs. They're a mutual fund, but they trade exactly like a stock, but they pay a high dividend, 6.9% dividend. Yeah, so I'm not a big fan of mutual funds just because of the fees. So first year, you got the mutual fund that might pay a dividend. You might have a dividend paying mutual fund pays 4%, but you're paying 3% for the dividend or for the mutual fund. You just don't see it because it's put into the actual cost of the mutual fund. So you're really only netting 1.6%. Where on these ETFs here, you might have a 0.25% management fee across all of it. So you get to keep, if it was 5%, you get to keep 4.75%. So I prefer those instead. All right. How do I get that call indicator, Carrie? You just type in a ticker symbol, NEM, and it comes up automatically. It's proprietary to our website here on incometrader.com because it was created by me for me. And this is my website. So the call indicator is right in through here automatically on all charts you pull. As soon as you pull them up, it comes up automatically. All right. So now what I want to do is I want to kind of wrap this up here. If you've got some more questions, I'll try to answer them going through here. But go to protectwealth.com. There's a 3-day summit coming up next week. I'll be speaking again on Tuesday and Wednesday, but I'll be covering completely different topics. So if you'd like what I'm covering, but you want to learn more about how do I find what are the actual best stocks to buy today, I'm going to go over it. And I'm actually going to buy one of those stocks in my account while I'm teaching the class and show you how to place a trade, how to write a cover call on it, how to make the money, how to go back into your portfolio and restructure your portfolio so it's done correctly so you don't have to pay somebody else to do that. It's a 3-day class. There's a 3-day summit, and it's absolutely free. So go to register@protectwealth.com. If you want to actually go to a 2-day class where I'm going to teach a 2-day class for 2 full days, it's $197 for the class, but protectwealth.com/stocks. And you can register there for a 2-day class. It'll be May 10th and 11th, I believe. It'll be a weekend class. It'll be 2 days long for $197 with a 100% money back guarantee if you don't like the class. But go get registered, guys. Learn a lot of other things from Protect Wealth. The point here really wasn't to say, how does the economy work? Who are the professors saying that, the trade tariffs? I can go to CNBC and say, someone said, oh, tariffs are going to work, tariffs not going to work. The whole point is I do not 100% believe that everything about the tariffs right now or about the tariffs. It's a negotiating tact to bring somebody to the table.
We got a blank screen again, Mike.
Oh, lost the screen again? Yeah. You did. Of course you did. Did you pay that Zoom bill?
I don't know. It's doesn't like me today.
Yeah. So
That's good.
I believe it was really just a negotiating tact, and it wasn't really just about tariffs. It was, if you go and you're doing business with somebody and they're 90% of your revenue, and they walk in the door and said, I'm not happy, I'm quitting, I'm not doing any business with you. What are you going to do? Whoa, wait a second. Let's start talking about this, right? Well, before you didn't want to talk about it. Now I say I'm not doing business with you. You want to talk about it. And when we start talking, that's when everything really starts to gel and come together. I think that's what this is really all about. So we should start seeing some things come across. Okay, I think that's all I have for you guys. If you have some more questions, let me know. If not, please go to protectwealth.com, get registered, or go to protectwealth.com/stocks and go ahead and get registered from there. and then you take it and then learn a bit more about how the stock market works. And hopefully this gives you a little bit of kind of what to look for, what to see out there. Don't be afraid of the tariffs. The media will try to make it really negative for you. They'll try to make it look as bad as they can, especially depending on which media you watch. Some media will say, oh, it's not bad. Some will say it's really bad because based if you're left or right. And I don't want this to be political. I just say it's going to happen one way or the other. So what should we look for if it's not going to be good? That's what this screen here was about. If it's not going to be good, what should we be looking at here? And if it does start to get some type of trade agreements, then maybe we're over here. So just different things to go back and take a look at, or here, one of the two. So other than that, guys, I appreciate you being on here tonight, this late at nighttime. Good seeing you too, Al. I appreciate you being on. I haven't seen you for a while. I think the last time we had dinner, I think, was a while with Stacy, I believe. But anyway, thank you guys. Please go to protectwealth.com and get registered for the 3-day summit they have coming up, or protectwealth.com/stocks and register for a 2-day training with me as we go back and just really dive into how do you analyze a stock? When do you buy? When do you sell? How do I know if it's a good stock? How long should I own it for? How do I make money if it's going to the downside? All that information so you really go out and start making some money. Other than that, I'm going to turn it back over to you, Kendall.
I love it, Mike. That was so much fun. I think the next class or the next book you should write is Mike Style Negotiation.
Is that what it is?
Fascinating. You know, it's interesting to see because you took a lot of the fear out of the market.
Yeah, or how to talk fast.
How to talk fast.
I do talk fast, and I do know that.
I love it.
You get excited talking about things that you like, and so you just talk fast.
I love it. No, fascinating. Yeah. It really was. Don and I were looking at it when you're talking about tariffs, and they've been around for a long time. They've been a tool. It's just a tool. It's negotiation. It really is.
It's a tool for negotiations, and that's what President Trump was all about, negotiations. It's just, and I don't want to negotiate with him. I think he would kick my butt if it was, because that's what he does. And I think that's what he's trying to do. I think he's trying to scare all the different countries into sitting down and talking with them. And the more of them he can get signed at once, the quicker he moves on to the next stage, wherever he's after. And I don't know what his agenda is, but I think that's really what he's after. So we shouldn't be afraid of it. We should just accept it. It's going to happen one way or the other. So what can we do to make money off of it? That's really what we want to be aware of.
So everyone, I hope you can see very well why we love Mike. We love his team because he takes the fear out of the market, takes the fear out of investing. Of course, that's all we see is the fear. So love it. It makes me calm. It makes me excited for the next summit next week, guys. So we have Mike next week. You'll be presenting for at least in a couple hours there. So if you can make it next week, Monday, Tuesday, Wednesday, please come. We'd love to have you. Protectwealth.com. You can see our upcoming event there. Mike, thank you so much for your time. We really appreciate it. What a goldmine of information. Seriously, there was nuggets you could take away and actually trade from this tonight. So beautiful. Thank you so much for sharing.
You bet.
Okay, everybody, thank you so much for being on. We'll get this recording out to you tomorrow, and we appreciate you taking the time to be here with us tonight. Thanks for being with us. Thanks, Mike.
Thanks, everybody. Okay, bye-bye.
Good night.